Now to explain the term of source and use, we have some examples. In this balance sheet, if you focus that for account receivable, the amount in ending was 637, but when the new year start, it increased to 654. The change is minus 17. So what will be it called? It will be called a source, because it will be helpful for the other party who is receiving the credit sales. In the same way, if the term of merchandise inventory come, our merchandise inventory was 586, now it become 537. So how much change is occur? It is 49, and it is a use for us. We have used the merchandise inventory. In the same way, the property, building and equipment amount was in the beginning 1517, now it become 1394. If we take the difference, it become 123. So what will happen? We have used this property and building. Now if we see their accumulated depreciations, 654 to 561, amount decline, it become plus 93. What it is showing? It is showing it is a source for us. We have collected 93 rupees as depreciation expense, so we are going to utilize that amount, so it become our source. From 654 it become 561, and it is 93 rupees change. This amount will be utilized, so it will become our source. Now if you see the current liabilities had, there is a positive change in the current liabilities. If you remember, I told you that account payable, that is 264 and 220, if we take the difference of these, we get plus 44. Our account payable are increasing. In the same way, our accrued wages and salaries payable are increasing. Our accrued income taxes payable are increasing. Our notes payable are increasing. I told you, whenever our liabilities will increase, it will be our source, because we are utilizing that money. In the same way, there are some liabilities like long-term debt, deferred income tax. So total liabilities are decreased with minus 2. Our long-term debt increased, decline, there is come decline, that is 482 to 439, it become minus 43. Our deferred income tax decline from 49 to 47, minus 2 change, it will be a use, because we are paying off the money, so it will be non-beneficial for us. Remember, whenever our sources are greater than our uses, it will be beneficial term. But whenever our uses are greater than sources, it will be non-beneficial. As I told you earlier, that sources are helpful for us because we are using those sources to invest, and uses are less beneficial because these are helpful for the other part. So we are going to make a cash flow statement. Cash flow statement is the combination of operating activities, investing activities, and financing activities. What are operating activities? The operating activities that affect current assets, current liabilities, or net income. It also includes the non-cash accounts like account payable, account receivable, and accumulated depreciation and amortization. So, in net operating activity, in operating activities, net income will come, changes in current assets will come, changes in non current assets like depreciation, changes in current liabilities, changes in non current liabilities that affect income statement. So these are the terms that are the part of operating activities. Then comes investing activities. Investing activities can be defined include transactions that involve acquiring or disposing of non-current assets, such as acquiring or selling property, plant and equipment, securities held for long-term investments like bonds and stock of other companies, and lending money to another entity. So what will we come in investing activities? Changes in non-current assets that are not included in net income. As I told that in investing activities, property, plant and equipment, sale, selling or acquiring come, investments, in bonds and stocks will come, and lending money, or we can say loans, to other company. What will be the benefits? We will be able to get profit by offering loans. We will get interest by purchasing bonds, we will be able to use the property or equipment for company operations. Then comes financing activities. As you all know, finance is the arrangement of money. We can say borrowing from or repaying creditors and transactions with the company owners are classified. It means whenever a company borrow a money by issuing a bond, the transaction is classified as financing activity. So, if we are our long-term debts, bonds, payments that we bond issued by us, not we have done investment, but we issued bond to generate finance. Against these bonds we are going to give interest, and against this investment we are taking interest. So these are the three types of activities that are included in cash flow statement. Now we are going to formulate or drive our cash flow statement. Company name, for the year, and statement of cash flow. It will come in title. First of all, the heads of operating activities will come. We will write first of all net income, then depreciation of assets, now if we say changes in account receivable, remember by the use of source and use term, we have decided whenever our account receivable will increase, our cash will go out. But whenever our account receivable will decrease, our cash will come in. You need to remember, whenever our account receivables amount increases, we will minus the amount. Whenever our account receivable amount decrease, we will add the amount, because with the collection of account receivable, our account receivable account will be decline or will decrease. That will impact as positive, that the cash get in. But the increase in account receivable, our cash go out in the form of inventory that we sold on credit. In the same way, whenever we will say changes in inventory, again it is the same. If we are purchasing the inventory on credit or on sales, what will happen? whenever we will purchase inventory, the increase in inventory will create a cash outflow, because whenever we purchase inventory we have to give the cash. That will be our outflow. With the purchase of inventory, our inventory increase and the cash goes out. Changes in prepaid expenses. Whenever our prepaid expenses will decrease, it will be a cash inflow. Whenever we will increase our prepaid expenses, it will create cash outflow because we are paying the money. Whenever our prepaid expenses will decrease, we are getting the money because this payment is already done. If this payment is already done, the cash go out and these amounts increase. If these payments are considered to be done, it means the prepaid expenses will decline. We will be able to add the cash. Then comes the concept of changes in account payable. Again the same. If our account payable are increasing, our cash flow will be inflow. Whenever our account payable are decreasing, it means we are paying the money. Our cash goes out, it becomes cash outflow. The main tip for you to remember is this: the current assets and current liabilities are inverted to each other. They are opposite, because whenever our account receivable increases, our cash goes out. Whenever our account payable is increasing, our current liability is increasing, we are able to get cash inflow. Against it, we got might be a inventory that increased our cash. In the same way, when our account payable is decline means we are paying off our liability, and because of it our cash goes out. But whenever we are receiving the account receivable and it is declining, it means our cash comes in. After adding up these terms, we will be able to get net cash provided by operating activities. How? By adding or subtracting cash from depreciation of assets, by subtracting the increase in inventory amount, by adding or subtracting the cash inflow or outflow from these amounts. After summing up these, we will be able to get some amount, and by adding net income and operating activity sum, net cash provided by net activities come. Now the term of investing activities come. You know, with the purchase of property our cash goes out, so we will subtract the amount. But if we are selling the property, it will become positive. You will show the plus value, or the amount will be in positive figure. If we say our long-term investments decrease, it means we got the cash inflow. But if our long-term investment increase, we did investment and our cash goes out, so we will subtract the amount. Like I told you that with the sale of property, our cash will come in and we will show the positive figure, and with the purchase of property, our cash goes out, we got the negative figure because cash goes out. In the same way, whenever our long-term investment decline, our money come back and it is showing cash inflow. But whenever we are doing more investment, it is increasing, our cash goes out against which we did investment. Another term, proceeds from sale of equipment. In very easy term, if we got the profit on sale of equipment, we will add it, but if we are getting loss, we will decline it. It will depend on profit or loss on the sale of equipment. So these terms will also come. By doing their total, we will be able to get net cash used in investing activities. By adding or subtracting these terms. Then comes financing activities. Increase in bonds payable. What does it mean? We are issuing bond, it will give us the cash. In the same way, if we are decreasing the bond payable, we have to give the money back, so it will reflect the cash outflow in case of decrease, because we are paying off the bonds. But if we are issuing bonds, it will increase our cash. We will get cash against issuing of bonds. Cash dividend paid. You all know the dividend is paid against shares, so cash dividend paid will decrease our cash. But in our investing activities, if we are getting the cash dividend, it will definitely increase our cash. In investing activities, if we have purchased the stock of other company, the shares of other company, then the cash dividend received will increase our cash. So net cash provided by financing activities. By adding these, we will be able to get net increase oblique decrease in cash and cash equivalents. Might be this positive will be positive figure by adding these, or might be the value is negative, so we will use the term decrease. if the value are, we will get the negative value. Another thing that you need to do cash at the beginning of the year, you will add it here. It is that balance that is available in balance sheet. The ending balance of balance sheet will become the beginning balance of the year. So we will write cash at the end of year by adding these two terms, the net increase decrease in cash equivalents and the cash at the beginning of the year. We will be able to get cash at the end of the year. This is all about the cash flow statement, how to formulate a cash flow statement. There is one more term in this chapter, that is free cash flows. Free cash flows is the combination of net cash provided by operating activities minus capital expenditures minus dividend. By subtracting the capital expenditures and dividend from the net cash provided by operating activities, we will be able to get free cash flow. Like if we take the term 259 million of net cash provided by operating activities, 138 million is the capital expenditure and 28 million is the dividend paid, our free cash flow is 93. What is this free cash flow? It measures a company's ability to fund its capital expenditure for property, building and equipment and its dividends from its net cash provided by operating activities. In very easy words, how much company is able to pay its capital expenditures and dividend from its operating activities net cash. It will be called as free cash flow. Thank you. This is all about today. And onward lectures, be ready for the quizzes. In next lectures, your quiz will be taken from lecture number 20 to 25. Whatever we have studied, you have to give the quiz in our coming lectures. Thank you.